Now let's start our wrap up of the West African markets with the BRVM 10 index closed trading on Tuesday at 218 points, down 0.4%, so reversing the strong gain we saw in the previous session. And meanwhile, the all share index, the BRVM composite, lost about 0.3%, closing at 196 points. Total value traded dropped to 2.5 billion CFA francs, and the currency trading at 506 CFA francs to the US dollar. Moving on to Ghana, we saw the GSE composite index up again, down up about 0.6% to 1,786 points, keeping its year-to-date change at around 49%, while the GSE financial stock index closed at 1,600 points, up almost 1%. Year-to-date, that index is up 53%, so clearly financials leading that market higher. And in Ghana, we see the CD trading at 1.96 CD to the US dollar. The year-to-date change now at a low of 3.2%. Moving on to Nigeria, the market trading pretty flat yesterday. The NSE All Share Index closing at 33,086 points. Across the sectors, we did see very little movement. The banks were slightly higher, while we saw the insurance index down over 1%. Let's now speak to Femi Oladehin. He is the partner at Argentil Capital Partners, and he gives us his thoughts on the market and some macro issues as well. Femi, it's great to have you back after a while. And maybe starting with the market, it seems the market has reached that point where it's struggling to go again. The market started very strongly in the year. The banking results have been a bit mixed, but people say many of them are in line with expectations. Your thoughts about where the market is right now?
Wole, the market is basically taking a breather, and I think that if you look at the performance of the market in the last 12 months, right, we've seen very strong performance across board. Indexes traded from 20,000 to 33,000, which is quite significant. I always felt that there was some form of technical barrier around the 35,000 mark, and we saw that happen earlier on in the year, and the market has basically trended down towards the 33,000 mark. What I believe should happen going forward is the market is going to focus a lot more on the macro side of things. I think that on the result side, we've pretty much seen the good, the bad, and the ugly, and everyone has an idea of what numbers are going to look like.
So it's the macro that will drive the market
macro
forward
that will
drive the direction
going forward. What's the direction from an interest rate environment? What's the direction for the currency? What's the call that the CBN is going to make in that regard? And I think that is more important now than people focusing on corporate results or corporate action. I think some of the sectors that have also led the market to where it is today, banking, agriculture, to let's extend the breweries, have to show significant growth to justify higher valuation numbers, and we have not seen that. So we're going to see the market take a breather for another couple of months until we start to see a clear direction from the central bank on where micro and macro
right. And of course, I think there is a small risk if we see some weakness in the currency that the market could actually pull back. What are your thoughts?
Absolutely. I think, it depends on the depth of the overvaluation of the naira that is perceived out there in the market. If the market moves from 155, 156 to 160 from the CBN point of view, I don't think the market is going to react violently to that. If you look at where year-to-date returns are, on a currency-adjusted basis, even if you had a 2-3% movement in the currency, it doesn't really affect your numbers. It's if we see significant depressions in oil prices, for example, that starts to put the budget at risk, or put the ability of the CBN to generate dollars at risk, then you can start to say there will be significant pressure on the naira like we saw in 2009. But if we don't see those sort of violent movements in either the macro numbers or even some of the micro numbers, then it's unlikely we're going to see a very sharp depreciation of the currency.
All right, so let's talk a bit about some of the macro issues. Recently, we saw President Goodluck Jonathan signing some power deals earlier this week. And then I think the next big thing is the sale of the NIPP projects, the additional power companies that the governments are holding. Before we get to that, maybe we can just review your thoughts about how the power sector reforms have gone up to this point.
I think it's a bright spot for the country, irrespective of whichever way you look at it from. Yeah, it's a bright spot. I mean, literally. The key issues we had at the beginning of the process was actually the capacity of the market to be able to fund those transactions, both local. We were convinced that the market wasn't going to attract international funding in the first round of transactions.
And we haven't
really seen that. So it's been quite remarkable that the local market has been able to provide that first round of funding for the 25% payment. The next hurdle, obviously, for the market is the balance 75% payment that all of the bidders have to pay. I think that what you're going to see is that a lot of the winners of those transactions will now start to look at the offshore market because there are capex plans to be funded, and so for some of those assets, the capex requirements are actually quite significant. So we think that is going to play a significant role in how the entire sector pans out. I still think that one or two of the bidders are going to fail to meet the 100% payment. I think that it's a difficult period to be raising that sort of financing in the market, especially if we start to see pressure on the naira.
Right.
If the naira starts to struggle, then even for the banks that have USD type funding that are able to fund these projects, they start to, the pricing starts to become a conversation that needs to be had. So that is a key. But in terms of the process, I think that we've navigated through the minefield of getting these assets out of government. Effectively this week, those assets have actually been handed over to the winning bidders. And that is good
conditional
news.
on paying the balance.
Well, conditional on paying the balance within the next 6 months. But that is good news. They've settled all the labor issues, even though at a significantly higher number than what was anticipated at the beginning of the process. But the key issue is that a lot of the impediments towards handing these assets over to the private sector have been dealt with, and that's a good sign.
Okay, so all those out of the way, but a quick word because we're almost out of time. The additional power projects to be sold, the power companies to be sold, we're hearing that they could start as early as June. Do you think that is
well, the process is that people must send in their RFPs by the end of June. Look, Wole, the NIPPs are better assets than the assets that were sold in the first round, because these are new assets. And in terms of ongoing
are they likely
capex
to the grid though? Because I had some concerns around that though.
A lot of the investment that has been happening recently has been towards bringing the power onto the grid. Now, those assets are new. Your ongoing capex is significantly lower because all you're going to be doing is turnaround maintenance, and you're not buying rundown assets. So they're more attractive assets, and I think that for people who lost out in the first round of transactions as well, it's an opportunity for them to still get to play in the power sector. And if you think about it, power is the biggest issue for Nigeria today. So those assets are always going to command some form of premium in the marketplace. And I think that anyone who's serious about power would definitely take a look at the NIPPs.